I'm John Kosar, Chief Market Strategist at Asbury Research. Thanks for listening to our latest Following the Money podcast. Today, I'll be talking about what our latest analysis and data-driven models are saying about current financial market conditions. That is, when to be on offense and looking for opportunities, and when to be on defense and protecting your capital. First, I'm very proud to announce that my son Jack is now working for Asbury Research on a full-time basis, effective Monday, July the 24th, last week. Jack and I have been building financial trading and investing models together for years, but on a limited part-time basis. Having Jack here full-time will enable Asbury Research to do a lot more on the quantitative side, enhancing the models and methodologies we have now and building new ones to further expand upon Asbury's data-driven approach to investing. I look forward to having you meet and interact with Jack in the months and years to come. Now let's get started. Today is Sunday, July the 30th. Let's follow the money. First, let's look at some bullet points pertaining to the U.S. broad market. Number one, the S&P 500 met our 4,600 upside target, which we first mentioned in our premium research on June the 3rd. It reached that target this past Thursday, July 27th, to capture a 9% gain in a little less than 2 months. Corrective declines often begin once initial upside targets are met, so we are watching the market closely here and looking for signs that we may be beginning a correction. Our Asbury 6 risk management model remains on a May 18th positive bias through the end of last week. The S&P 500 has risen by 10% since then. You could learn more about the Asbury 6 by visiting asburyresearch.com and clicking the models heading. Models. Major overhead resistance exists at S&P 500 4637, which is the March 2022 benchmark high. A sustained rise above it appears unlikely without at least a minor corrective decline. First, check our premium research for the latest location of primary tactical support, as a move below it amid a negative shift in the Asbury 6 would indicate that this overdue corrective decline in the U.S. stock market has begun. Next, let's move to sector rotation via our SEAF model, which follows the money around the 11 sector spiders of the S&P 500. SEAF, S-E-A-F, is an acronym for Sector ETF Asset Flows. The model exited its May 1st long overweight signal in the technology sector, XLK, this past Friday after capturing an 18.1% outright gain and outperforming the S&P 500 by 7.2%. SEAF currently retains its early July overweight in financials and has added a new long overweight signal in an additional sector as of the opening on Monday. Asbury Research subscribers can find out about this new SEAF signal by visiting our password-protected research center. And as this trade gets underway and we allow our subscribers to take advantage of it, we will be talking about it in future Following the Money podcasts. Now let's look at domestic asset allocation via our Carp Model. Carp, C-A-R-P, is an acronym for Cross-Asset Relative Performance. Our Carp Model continues to favor growth, technology, and high beta as overweights. Growth has risen by 20% outright, while also outperforming the S&P 500 by 9% since first appearing in our model on January the 26th. Technology, QQQ is what we use for that, has risen by 36% outright, while outperforming the S&P 500 by 18% since first appearing as a buy overweight signal in Carp on January 20th. High beta stocks have risen by 16%, while outperforming the S&P 500 by 7% since first appearing as a buy overweight in the Carp model on May the 18th. By the way, what we are using for high beta is SPHB, and what we are using for growth is IWF, which is the Russell 1000 Growth Index. Finally, let's move to global asset allocation via Asbury Research's U.S. versus the world model. The model exited its May 5th long/overweight signal in Brazil, the ticker EWZ, on July the 19th after capturing an 18% outright gain and simultaneously outperforming the S&P 500 by 1%. So there it is. Our latest bi-weekly Following the Money podcast for today, and a short synopsis of what we think is particularly important to pay attention to as we move into August. A quick reminder that we have been offering a 10% discount on research subscriptions during the month of July. That special offer will end tomorrow, Monday, July 31st at midnight. Visit asburyresearch.com and use the contact tab to request specific information about services and pricing. If you'd rather just take advantage of the free stuff for now, make sure you subscribe to our Following the Money podcast right here on YouTube. Finally, the legal stuff. This podcast is provided for information purposes only and is not intended to be a solicitation to buy or sell securities. The performance indicated from backtesting or historical track record may not be typical of future performance. No inferences may be made and no guarantees of profitability are being stated by Asbury Research, LLC. The risk of loss in trading financial assets can be substantial. Therefore, you should carefully consider whether such trading is suitable for you in light of your financial condition. Thanks for listening. We'll see you at the next one.